This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surbhi and Nigel. Guys, hi, good morning. Trust everyone saw the match.
What a game.
What a game.
What a game.
Come on!
Just when you thought the batsman, so I actually, I was a little tired and sleepy. You had to stay up to watch the batting. And just when you thought the batsmen have put on this great show, comes a gentleman called Mohammad Shami.
Oh, it was absolutely a thriller, and for the first time, I think, in the tournament, we were feeling a little bit challenged at one point of time. I was with this, I was having dinner with this senior ex-banker, and then he also was getting a little iffy. He said, Nigel, just don't move from your seat. So we were not moving. Then the kids were moving around. Normally, they're allowed to move, but they were also told not to move. And luckily, the wicket went, So it was a splendid performance. The batsmen, they deliver the goods. Shami, what do you say about him? Wasn't a semi-final, it was a Shami final.
No, actually the entire team pulled together, right?
Absolutely.
And,
super.
Is absolutely stellar performance, all-rounded performance, and as Nigel said, batsmen, the bowlers, everything coming together in a perfect way. So
and captain Rohit Sharma,
Absolutely.
After that flying start.
Quick 47 runs,
Yeah.
and then coming in there and marshalling, his forces.
And then the records breaking, Virat Kohli, taking on the mantle from Sachin Tendulkar.
It was an epic one. So, I think...
Let's keep something for the final.
Exactly. Yeah. So the second semi-final is today, and of course, we'll decide who we play. Not we won't decide, but the semi-final. The second one will decide who we play in the finals. But for the market, let's just direct our energies back to how things will be this morning, right? Was yesterday the semi-final for the markets, and today, not a final, but the path to some sort of a climactic actions, down the year. That's the question that we want to begin the day with. So this is what you want to know as far as the session this morning is concerned. We had a super Wednesday. And once again, to use the same sort of, phrase, do we have, is a more clearer line of sight to newer highs opening? That's the real question, which I think we need to kind of deal with. And if that is true, how do you need to position yourself? And those are things which come later. But I think the answer, to my mind, has been that way from the time that we had the FOMC, which is 2 weeks back, is that yes, it was a very significant last Fed meeting. The CPI number has only reinforced the expectation that the hiking cycle globally is done. And yesterday was a complete global rally. It was not just in India, 1.5% move higher, but it was a global rally. So let's just rewind the clock back to last night. We had a flat close for US equities. S&P was up 0.16. The Nasdaq was absolutely flat. You had data which came through. So retail sales numbers were resilient. This is for the month of October. After CPI, we had the producer price numbers which came through, and they were softer. Some are pointing to and complaining about some hawkish nuance in the PPI, but overall, at the headline level, the producer price numbers, like the CPI, were soft. So it kind of, once again, reinforces those expectations of a soft landing, which is the fact that inflation will cool down and the economy will not need to slow down very severely. Now, this is the yield. So there's a bit of an uptick, 9 basis points on the 10-year. We are back at about 4.54%, at least, on the rate side, we've not had a big follow-through. Actually, if anything, half of the fall that we saw in yields, pullback that we saw in yields, it's kind of come back. So watch this. Dollar index, about 1/3% higher, 104.38 in the dollar index. Oil is down almost 2%. We're at about $81 now on Brent oil prices. So it's an okay kind of a handoff, once again, from Wall Street. It's obviously not what we woke up to yesterday morning, but those are rare days. But there is nothing damaging really here. Now, the Nifty high, just to come back and circle back to levels that you need to watch out for, the high yesterday was 19,693. That is, by the way, exactly the 61.8% retracement. So that's the first level which becomes important. It's a bit of a pivot, both on the way as the market moves higher, it becomes a bit of a support. And if the market dips a little bit, that's the level to take out. But the high yesterday was there, and we closed about 10-15 points under it. Next is the upper Bollinger Band for the Nifty, which is at about 19,785. That's the first level. And then after that, the October swing high for the Nifty is 19,843. You know, when we talk about all-time highs, it's not very far away, but even from where we are now to that level, these are the levels that the market one by one needs to take out. Support comes in at the 40-day exponential moving average, which stands at 19,455. Of course, with a big gap like yesterday, it tends to leave some of these levels behind. Now, for the Bank Nifty, similar kind of pattern. The next resistance for the Nifty Bank is 44,700. That is the 61.8% retracement for that particular index. We left off at 44,200. And the 40-day exponential, which is, 43,891, that is basically the support on the way down if the market starts to sell off a little bit. The Gift Nifty will come up on your screen, and I think that will give us an indication of how things are likely to start, about 30 points higher. I would say just about right, given the fact that from overnight, we've not had any bombastic kind of cues or anything of that sort. Once again, the idea would be yesterday was very different. It was one of those rare days where you could buy after the open and then hope to make money, and you actually did. Not very much after that, because at least on the index, we only added a few, not a huge deal after the opening levels, but we managed to end higher. But those are rare days, as I said yesterday as well. Typically, you want to buy dips to be able to sell higher, especially if you're trading intraday. Surabhi.
Absolutely, Prashant. I mean, just to add to the point that you made, I guess we're continuing to get more good news on inflation. That's one aspect of it. So I just want to reiterate that number that came out yesterday, the producer price number in the US, which is a measure of wholesale prices. Just because it's a pretty significant one. I mean, that the decline there is, the pace of decline is the sharpest we've seen in not many months, but many years. In fact, the biggest drop since April 2020. That's a 0.5% month-on-month decline that we got on the US PPI. The second good news on inflation is coming in from the crude markets. Brent, by the way, is close to $80 a barrel, because the buildup that we had in stockpiles was massive. And the data was coming after a gap of a week. Last week, there were some technical upgrades, etc. So EIA didn't release the data. That's the US, Energy Administration. The buildup was 3.6 million barrels. The market's expectation was 1.5 to about 1.8. So huge rise in US oil stockpiles, and therefore downward pressure on oil prices. So again, two good news points for inflation. But beyond inflation, I'm actually tracking all of this diplomacy between US and China a little more closely today. Now, it doesn't impact the market today, but it's important to track from a medium-term basis. Remember the whole China +1, the whole shifting of global supply chains. Not saying that gets unraveled in a day, but it's important to track these things on a longer-term basis, because that's very significant statements. The body language seems very positive. It was the first meeting between the two leaders in over a year, first physical meeting. It took place in San Francisco. And look at President Biden's statement immediately after that. The tweet is up for you. He is going, and the operative word is, today we made real progress. That's what he's saying. So all the commentary is exceedingly optimistic. He went on to say that critical global challenges we face, from climate change to counter narcotics to artificial intelligence, demand our joint efforts. So the conversation, the nuances are very, very sort of reconciliatory, if I were to say that. Let's see what Mr. Jay said. For two large countries like China and the United States, turning their back on each other is not an option. Planet Earth is big enough for the two countries to succeed. So yes, there's a lot of diplomacy involved here, high-level statements being made, but they're all on the positive side. It's something to keep in mind from a more medium-term perspective. So that's one. But coming back to the here and now, yesterday was interesting. Remember, I was pointing out how FII selling is reducing in the market in November. We had a buy figure on the big bazooka day yesterday when a lot of levels got taken out. So we have about 500 crores of net positive buy-in from foreign investors, and domestic institutions were buyers to the effect of about 600 crores. So on the flows picture, we're pretty positive, which brings me to the question, when FIIs start coming in, banks start performing. We saw the first hint of that yesterday. Let's not, look at what's happening with Bajaj Finance as a separate issue with respect to that particular company, but largely will banks and financials, will they start taking up the leadership mantle? I think that's something I'll watch out for today, Nigel.
Well, as is the case with cricket, when your top batsman does well, it makes the batting lineup feel so good, right?
Rohit Sharma.
Rohit Sharma or Virat, whoever you want to refer to. So the Nifty Bank in that context, it's done a little bit of an underperformance. Yeah. And now it's reaching this crucial technical zone. So let's pull up the Nifty, and we can pull up the Nifty Bank, and maybe we can map the 50 and the 100 DMA mark. Now, in the Nifty, yesterday we went ahead and we conquered that mark. That's the 50 as well as the 100 DMA, mildly above that level. So that's looking quite good. Now, on the flip side, you look at the Nifty Bank, well, it's reaching into that congestion zone. That's 44,230 approximately to 44,500. So a little bit shy of that level. That's the crucial resistance mark on the Nifty Bank. So I'll want that, the bulls will want the Nifty Bank to go ahead and conquer that range. Now, on the flows, as Surabhi said, yes, the FIs, they turned buyers. I'm looking at the net institutional flows, and that number looked very, very good at more than 1,000 crores. The last time we saw a number as large as this or anywhere close to this was on October 23rd. So in that sense, that net institutional number is looking pretty good. The FIs positioning, now they're adding long positions. Yesterday, after a while, they added more longs than shorts, close to 4,300 contracts. And now the short positions have come down to around 80%. Remember, at the peak, it was close to around 90%. It's come down to 80%. And if you pull it up in absolute contract terms, well, the FI short positioning in contracts has come down from around 175,000. Well, that's come down to around 143,000. That's close to around 30,000 contracts that have got covered out. And that explains why a bit of a bounce that we've seen. So till now, we've seen short covering. Let's see whether the flows picture turns positive. Maybe that's the other factor that drives us back to around that 20,000 mark. Two strikes were active, 19,600, 19,650 put. Between them, they added more than 2 crore shares, and there was writing being seen at those levels. So since there's writing been seen there, 19,550 to 19,600 becomes a very, very crucial mark, in terms of a support level. Just for the day, remember, we have weekly expiry as well that plays out. And the 50 DMA as well comes back in that range itself. So that's crucial. The Nifty Bank, if that can get past the 50 and the 100 DMA, then we're taking the Nifty closer around the 20,000 odd mark. And it'll obviously help this journey because till now, the Nifty Bank has been a bit of an underperformer. The gift Nifty was suggesting a mildly flattish to a positive start. You like to look at that. And I think you need to buy those intraday dips and you need to participate on the long side, just going by the texture of the market. Broader market party will continue as well. And that's looking quite strong.
Okay, well, so that's basically all you need to know as we start another trading session. Before we go any further, let's quickly tell you what is lined up here in the first half hour of the show. We have our research team joining us with a list of top 10 stocks for the day coming up after the global setup, which is right now. At 8:30, we do a fundamental stock check with Deepan Mehta of Elixir Equities to understand what he's making of specific stocks in the market as a whole.
Okay, so all that's coming up, but we kick it off with the equity call of the morning, and this one's coming in from Sanjeev Prasad of Kotak Institutional Equities. He says the outcome of various events in the next few months could determine the performance of 3 distinct markets in India. In H1 CY24, he says mega caps are in a bear market, large caps and quality mid caps are in a bull market, and mid and small caps in general are in a bubble market. He prefers mega cap stocks, noting their reasonable valuations, and sees low returns for the broader market in general.
Okay, well, let's get you some money market views now. We have Parul Mittal-Sinha of Standard Chartered Bank, who says that the USD INR saw downward buys after touching record highs last week. She says the impact of a weaker dollar post-US CPI data and lower oil prices were offset by record trade deficit. She expects the dollar INR pair to trade between 82.9 to 83.25 to a dollar next week. She adds dollar, oil, and buyer sell activity of public sector enterprises will be key drivers for forex markets.
On bonds, Parul says domestic yields eased last week, tracking the sharp drop in global rates post downward US CPI data. Surprise and inline India CPI data. She expects the 10-year benchmark bond yield to trade in a range of 710 to 730 through the week. In the absence of key triggers, she says global rates and oil prices will stay key market drivers, and with system liquidity in deficit, OMO sales fears have ebbed in the near term.